All right, guys, we're live. Let's chat live with your host, the one and only Joe Saglimbeni. And today I'm going to do a little Let's Chat live on how today's investor is spoiled. And a little bit about myself, Joe Saglimbeni, blue collar worker, over 3 decades of investing in the stock market. And here we are on my YouTube channel, and we are live. So I hope you guys are all out there. I should be public. Hopefully, if I am, if I'm not, but I think I am. Please give me a like, a share, a comment, chat if you want in the chat here. And when this live chat does become a video, please share it, comment, like it, and let that algorithm work for me. So today, I wanted to bring up a subject that really I wanted to talk about for many, many times before, and it's about today's investor. How many tools and how they have the advantage, how they're really spoiled compared to when I was a young investor back in the early 1990s. So, what do I mean by that? Well, I actually am going to share a little screen here of, let me get to it right now, of a little Boglehead forum on commission pricing. And if you look at this little Boglehead, and if you don't know who Bogleheads are, they love Vanguard index funds, and they like paying very low commissions. Vanguard has historically low commissions on their mutual funds. So there was this little thread about commission pricing. But the interesting thing here is what one of the threads said. And right here, this US Speed, I think back in the old days, he was trading 1997, and it was Morgan Stanley, and it was 1995, then it went to 14.95, then it went to 12.95, and then it went to $8. Now this thread was in 2010 roughly. All right, so basically what it comes down to is commission trading back in 97 looked like it was around $20. So I've been investing since the early 1990s. And I remember I was investing through a full brokerage house called A.G. Edwards. And I believe now it's under the Wells Fargo name or something. I don't know, but I don't trade and use A.G. Edwards anymore. I left over a decade ago. But at the time, in the early 1990s, I slightly remember buying shares of a block, which used to be 100 shares of a stock, for roughly $45 to $60 a trade. And to get your best pricing, if I remember, you had to buy a block, which meant 100 shares of a stock. So we are definitely lower than that now. We're at zero now. And the zero phenomenon started around, I would say, late 2018s, basically, to now. I mean, 2021, it definitely hit. I have this article here from CNBC, which I'm going to show in the stream here. And in this article, it basically says that major brokerage firms have been presumed to go to zero fees since 2013. That's when Robinhood, the app that we all know now today, started having, I guess, free stock trading. So I didn't use Robinhood. I was with Fidelity, and I think I remember Fidelity was around 795 or 995 back in 2013. But you see in this article, this was from, let me see, this article was from 2019, and the commission pricing, I think, started with JP Morgan, I think, in 2018. Let's go here and see here. Yeah, JP Morgan Chase launched its online investing platform in 2018, commission free. And then, and this is from Investopedia, and then basically the big names started following 2021. So basically, we're talking about the fact that since early 2021, commissions have basically been free. Now, they've been scaling down from when I started investing over 3 decades ago. But it's not only commissions that have gotten better for the investors of today. First of all, the material of stuff that you get, let's say you joined Fidelity or even Ameritrade or even Schwab or even Vanguard, the amount of material and analyst reports that you see on your account is immense. I did not have that, especially with A.G. Edwards. I actually had to literally talk to my broker, call him or go visit him, sit down and talk with him about stocks. And what I realized back then was, even back then, and I was early 20s, sometimes a teen, 19, 20 years old, he kept giving me these small micro cap pink sheet warrant type stocks that, were very risky. Yeah, I mean, the chance of them going up and making hundreds of percent. I mean, if they did go up, they would make hundreds of percentage returns, but they never seemed to go up. And that's when I started taking control of my own way of investing, started looking into Zacks and value line surveys, going to the library, and actually looking at charts that were a month, a year old, because you didn't really have, the internet couldn't even handle graphical type stocks back in early stock charts back in early 1990s. I mean, you barely can get a computer that could actually show graphical representation. So you had to go to the library. You had to subscribe to newsletters, kind of, to find out about a stock. So I think back then I started reading Barron's and Investors Business Daily and the Wall Street Journal. And I would actually save money by going to like Barnes and Nobles and actually reading, having a cup of coffee and reading article upon article, looking at info on Wall Street Journal, Investors Business Daily, Barron's. And that's how I got my knowledge about stocks. Then I started reading books and so forth and so on. But nowadays, you have all those tools on basically your Fidelity account right at your fingertips. Dividend news, earnings per share news, charting, ways to use moving averages and to draw on your charts, exclusive stuff that you have for basically free. And if you want, you could pick up and make an appointment with a financial advisor on any of these brokerage houses today. And that's what I mean. Today's investor is so spoiled. I mean, look what I had to do back in the early 90s. I had to go to the library, or I had to go to Barnes & Noble. I had to sit down, look over article, value line surveys, value line charting services. Listen to the radio buy books on how to trade stocks. What was an option? What's not an option? What are futures? Now, all this material is available on Fidelity, on Schwab, on E-Trade. And that's why I think today's investor has such an advantage over me when I was investing back in the 1990s. Now, it's easier, it's commission free. Not only do you have all these materials within your brokerage, like Fidelity or Schwab, but now you have YouTube videos, XM satellite radio. You have a ton of news on CNBC, which CNBC I don't even think was around in 1991. Trying to think, yeah, it might have been around, but it had to be early formation with just tickers on the bottom of the screen. I don't think Jim Cramer was doing buy back in 1991, 92. I mean, he might have been. I think he was with Larry Kudlow, and he was doing some kind of cable program. But really, what it comes down to is the advantage of today's investor. They should use these advantages. I mean, I certainly do. And I think that everybody can learn. They could screen mutual funds. They could screen stocks by market cap, by EPS, by small cap, big cap, by industry, by sector. Same thing with mutual funds. With costs right in front of you. Like, you don't have to call up your broker to find out a cost of something. And that's, I mean, I definitely know that today's investor no doubt has the advantage over me. And that's really the goal here, is that the best of these websites like Fidelity, Schwab, E-Trade, Ameritrade, the best of them are trying to get your dollar to invest with them, because the only way they really make money are on these little margins between a broker dealer and Fidelity or Vanguard. They don't make really much money from you. Very small amount of pennies that they make. So they want you to go for the bigger services, maybe their financial advisor service, or bring in more money that they can run or manage for you. And that's the deal now. The days of the big brokerage houses like A.G. Edwards and Morgan Stanley and Merrill Lynch and Bear Stearns, I mean, some of them are gone, out of business. And the reason why they're out of business, because they weren't doing the best thing for you. So you got to just take this up yourself and learn and realize the advantages you have over the investor of the early 1990s. Now, yeah, I have a lot of wisdom maybe and a lot of experience investing since I started when I was basically a teenager. But still, I don't know everything. And the tools that I get from these websites are amazing, even on online stuff like Yahoo and Google. News article upon news article. You have Bloomberg TV, you have CNBC, you have books. So much so the investor now has the advantage. And I don't know if they're taking advantage of it. I know I am. And I want you to take advantage of it and continue to learn to invest in the stock market. And, also, I don't know if I have to make a disclaimer here, but again, I'm not a financial professional. I don't even play one on YouTube. This is just opinion, so please reach out to your financial professional, and hopefully he doesn't charge you large commissions. But, today, this investor has the advantage, and I think it's time for them, and hopefully they are taking advantage of these free commissions and tons of tools and tons of screening stuff on their sites and tons of analyst information. And, they'll get to a point where they get so comfortable in investing, realize that investing is a great thing and not a risky thing. It doesn't have to be a risky thing. It can be a system that you make your own, and the returns are amazing. They can be amazing. All right, so that's basically it, guys. All right, so hopefully you guys liked this live stream, or you continue to enjoy these live streams on Saturday. I am hopefully going to do another live stream next Saturday, and I might have a surprise or two. And if I do, I will try to announce it in the community tab the day before. Hopefully you guys will be here next Saturday, and please continue to like, comment, share, subscribe. Let that algorithm work for me. And I'm going to say goodbye. So, guys, enjoy. Have a great rest of the weekend. Goodbye.